Let's talk about gold prices. They are under intense pressure as we head into the non-farm payrolls. The market does anticipate that we're going to have job creation, but it's going to be much lower than the prior month. In November, we created 245,000 new jobs in the US. This month for December, people think that we will have only created 71,000 new jobs. That's what we're going to talk about in today's market update. All right, so you're looking right now at gold prices, and gold prices had a quite sharp drop. They obviously had a very nice move from the very lows here in November, and they traded from about a level of 1762 all the way up to 1958. Now, maybe one could say that went up, or definitely went up because of dollar weakness, right? But what's also interesting is that Joe Biden is controlling his Democratic Party is now controlling the Senate and the House, so that's definitely going to allow them to do some more market stimulus if they wanted to. But sometimes what happens, you don't really get the market reaction you wanted, which is higher prices in gold, and that might be just because people bought here on that anticipation, possibly. I don't really know, and I don't really think it has been fully priced in. And from a purely technical perspective, we'll still remain in an uptrend. You can see that we bounce from support levels. So you have this level here, which is 1867. You also have 1852. And as long as you're above 1852, that's sort of the most important level to watch. But sometimes if you look at those levels, you don't really get a good risk-reward ratio. And where we are now, I do think we get a decent risk-reward ratio. And that's also what the ATFX support and resistance indicator is telling us. It tells us that we should be bullish between this level and this level here for this to go upwards. Now, bear in mind, the indicator has been bullish already from these levels. So this is the second chance we're going to give this. And on the break to this level down here, which is the 1868 level, then that could be the beginning of a steep decline. So we do need to be careful here when it comes down to how we choose to trade this. Now, the ISM numbers, they were out yesterday, much stronger than anticipated. So I have a suspicion that maybe the estimation for 71,000 new jobs is a bit too low. So I think there's going to be a beat, which could, of course, if anything, soften gold even further if the numbers are really good. This was quite interesting as well. If you look at things like dollar to African rand, if you look at something like dollar Mexican peso, you're clearly seeing the dollar gaining in those markets, which is quite interesting. Because one of the themes people talked about over the last couple of months is that maybe emerging market currencies would be the best way to be positioned. And it has been a very good time to be buying these emerging market currencies. But we're now starting to see a bit of weakness, which is interesting, something to observe. Because we're not really seeing dollar strength in Euro USD. We're not seeing dollar strength in things like GBP versus the USD. So in those main currencies, we're still seeing dollar weakness, which should result into gold weakness. So we're okay for now, but keep an eye on those emerging market currencies and keep an eye on this level here in gold, especially if the NFPs are stronger than expected. So if the NFPs are super strong and you're not in a position, then it's actually better to not be getting involved. In fact, non-farm payrolls in general can be really difficult. You can get some funny moves, and that's why I don't really pay too much attention to it, except that I trade less on non-farm payrolls days. So what's the key message here? I will just be bullish about 1867. Simple as that. But of course, if the non-farm payrolls are super good, if they're really, really good, the first thing you want to be doing is not buying gold unless you're really, really confident that this level is going to hold. So that's the way to look at it. If it's a mixed report or a weak report, gold should probably trade higher. And with that, guys, we're going to conclude today's market update. If you have any questions for me, just leave them in the comment section. As well, in the comment section, we're going to put a link here for the support and resistance indicator, something you can get for free. Try that out for a few days. And if you want to, you can just get an ATFX account and get full access. Provides levels for all major markets, major currencies, major indices, and major commodities, and as well major cryptocurrencies. Thanks for watching, and I'll see you guys soon, and have a good weekend. Bye.